Hi friends, in this video we are going to investigate what are the reasons that made us to go long at this point. We were expecting that this is the point where market is going to go very big high, but for some reasons it collapsed. So let me first show you what made us think that this is going to be a very crucial point for market to go up and why did it fail. So first think about the reasons why we choose that this is the point where market is going to go heavily on the upside. The first thing that we look forward is that the buyers from this zone are too extreme that they didn't even allow the sellers to go below this low and then has gone as high as to the inward frequency of the major flow downward. That only shows the power of buyers at this point. And the sudden surge of buyers has happened from this point. Until then, the price was going in a traveling motion, and at this point, it picked up the momentum. So the key buyers along this vector have been very significant at this point. So that is the first impression. Okay, touching this line is that point where buyers have showed their full strength, and in very few candles, they have managed to reach as many as 40,330 to 41,630. It's almost 1,000 points, then more than 1,000 points rally in just few candles. So when price is coming back again and touching this line, I'm talking about this candle, this green candle. Okay, now it has touched that line and then created a bullish fractal bar. Now let us think about the context here. This indicates that the sellers coming from this point have suddenly slowed down, and the number of candles that took for price to come to this level are 1, 2, 3, 4, 5. This is a 1 hour chart, and the touch of this line has again created a powerful bullish bar. So this shows to indicate that these buyers are picking up the market from here itself instead of here. So that is the first context, that if these buyers are going to hold their position strong, then they're going to take the market very high. So that is the context analysis. Now let's bring up various techniques in which if our context agrees with the line work. The other line work I can think about, as I have shown in the video, is the frequency line. Even this frequency line is in agreement with this bullish fractal bar. This is from lower end of this vector. And if we go the other side of vector, and if you draw a modified skip fishbowl within the price extremes, let me signify with say violet color. So even this modified skip fishbowl, which is carrying an edge at its upper line of this fishbowl, is now also being beautifully respected in its bottom line. So now you see that price at this point is touching multiple lines, and then it never has fell down. So this shows to indicate that this could be a major market extreme. Now we can also think about other techniques such as uh, reversal divergence. Price is going lower low here, but RSI is going higher high. Okay, we can also think about VWAP. So if I draw a VWAP and then press anchor it at the latest high, price is respecting at that point. Okay, so this is the point we're referring to. Price is respecting the lower standard deviation at this point. So there are multiple intersections of techniques at this point that made us believe that market is going to go high, because all this point, all this time, these buyers are holding their position very strong after heavy manipulation. Now it's time for them to show their full potential, and they are going to go high. That made us believe that the market is going to go high. However, now let's investigate why this trade has failed. Now, the major factors for any price to move up or high is the supply and demand zone. And this supply and demand is based on various factors which are not a complete grip of technical analysis. So, which means to say that technical analysis, no matter how good it looks like, is still imperfect. There are many other factors that indicate price to move in any direction. So in this case, the price reacted heavily on Monday. We were in agreement with this price candle is in agreement with our long trade idea. Price has moved by almost 300 points in just 20 minutes. So However, market has crashed down. The reason being that this sudden crash of the market can be interlinked to the Silicon Valley failure in its operations. So a collapse of a major market, which is influencing many other banks across the world, is the reason that has also impacted our stock market and our banking sector. And that's the reason I think most likely the price has fallen below this low. Probably we would have waited for further move of price upward, and then we could have taken a better decision to go long or not. However, since the many techniques were intersecting at this point, we believe that this is going to the point where market is going to go high without waiting for further reading of price. So that's the only mistake. Otherwise, we could have captured this lower move also had we waited a little longer for price to take higher highs. So that's about this video, guys. The summary of the video is that no matter how good the technical analysis is, it still is impacted by various many other factors which are not in control of just reading the price charts. And this is one such typical case where our analysis has failed, even though there are multiple techniques intersecting at the same point and making us to believe that this market is going to go high. So that's about this video, guys. See you in another video. Bye bye.